I mentioned the other day how I was considering being more aggressive and reinvesting all my dividends received from high yield ETFs back into themselves, into the safer high yield ETFs such as SPY, QQI, TSPY, TDAC, MLPI, XPay, things like that, to kind of accelerate even more how fast I can kind of replace my full monthly salary. And this was honestly like a little bit in a reaction to the layoff and just wanting to safeguard against any future ones. Like say if with my new job I end up hitting a layoff in a year or 2 or 3 years or whatnot, like I wanted to be in a better position where I don't have to worry about getting unemployment and I can kind of just rely on my portfolio at that point already. But yeah, today I really wanted to stress test that really and go over some projections I ran this week to see what would that potentially look and feel like, right? And what I'll be doing going forward after seeing these projections. I just wanted to walk everyone through that today, through those sheets. So as always, you'll get radical transparency on my channel. You'll see all my real numbers. And if you want to poke around yourself in my portfolio, check out my free Snowball portfolio link in the description below, along with a bunch of other free links. And yeah, hit like and subscribe if you want to keep seeing this transparency. Just a usual disclaimer, this video is for entertainment and education purposes only. I'm not a financial advisor and nothing here should be taken as financial investment or tax advice. I'm simply sharing my personal investing journey and documenting my own results. Investing always carries risk, especially when using margin, and you can potentially lose money. Don't copy what I'm investing in blindly without understanding the risks and doing your own due diligence. No returns are guaranteed. And then as far as my monthly flow that I typically do on the channel, I invest 100% of my income. Previously, I'd invest at least 10.8K a month. That's probably going to be more like 10.7 with my new job. But now it'll be, until then, in the next couple of weeks, it'll be 1,152 every week with my unemployment income. I invest normally into growth and high yield ETFs, but with the layoff, I'll be focusing on just safer, higher yield ETFs, things like SPY, QQI, TSPY, TDAC, XPay, MLPI, things like that, to keep my cash flow growing. I've stopped using a traditional bank account to live entirely out of my Robinhood brokerage account. I use cheap margin of 4.5% to pay all my bills and bridge the gap between my monthly dividends and monthly bills. And the goal is to ideally never sell a share to take money out of the account and only ever rebalance within the account, never take money out in that way. I want to forever compound both my growth and high yield assets and eventually have my monthly dividends exceed my monthly expenses. If you want an in-depth breakdown video of the old chart, definitely check out this video at the top right. I'll be closer to that chart once I start a job again, but I'll have to make some tweaks again there. So look out for that. Let's just dive in. So let's just take a quick look at Robinhood. This week was another brutal week in the market with the volatility from the war. You can kind of see this is a live portfolio, all my positions here, nothing's hidden, right? Started off the week strong and then it was kind of going good for the last couple of days. And then after the last 2 days, it just kind of took a dump here and it's been down quite a bit. So you kind of see the power of the amplification of margin really. And like, yeah, even if you go in the portfolio here, right, you see that like, if we just go off like the gross portfolio value of the day, like I would have been down just 1.32%, right? But because of the margin, that's amplified by almost double, right? So I was actually down 3% today, which was a lot. So yeah, definitely always got to be mindful with that one margin, right? It'll work great in the green days, but in the red days, we're kind of really seeing the effects of it with the war volatility right now. If we pop over to some new sheets here that I was messing around with. So there's a new sheet here called Div Reinvest, High Yield Projection. So I basically went off like my tracking sheet that I kind of typically show at the end of the month, right? So I just added like a temporary entry here for where March was at a little bit early. So I'll update this in the normal tracking one after. So there's a couple changes here. So in this one, I'm kind of making a couple different assumptions. So one, I'm investing 100% into high yield ETFs. So safer ones like SPY, QQI, TSPY, TDAC, which on average will kind of average out to like 15.4% yield between all of them, right? And also all my high yield dividends here in this projection are all reinvested. And I'm still withdrawing from my brokerage as bills as usual, right? So you'll see here, that's the blended yield. The annual growth rate, I was actually assuming 7% previously in kind of like my normal tracking. For this one, I'm bringing it down to 4%. And I can even show it at 0% too, if we want to assume that later. And so that gives a monthly growth rate of 0.33%. My monthly paycheck contribution is more like 10.7K. And yeah, there's still inflation here for the monthly expenses that's growing every year. And then, so the average monthly dividends that I add here, I need to remove this part here. So this is assuming that I'm taking my paycheck, applying this blended yield, right? And then dividing that by 12 to kind of get roughly how much I'm adding every month in monthly dividends. So this gets added to this column, right? So you can kind of see the formula here where it's basically taking the last month's dividend, adding that average monthly dividend that I'm adding per month. This is the dividend from the paycheck. And then this is the dividend from dividends that get that get added every month, right? So that's kind of just compounding a lot more, obviously. So it's almost like, yeah, like 1.5 in a way. Because like 1 of this and then 0.5 of this, which is roughly where the dividend's at compared to the paycheck. So yeah, and that happens every month. So these the monthly dividends here compound quite a bit faster, right? And then I'm assuming that like no margin is being paid down essentially in this scenario, right? So that this kind of just keeps growing. And we'll kind of go over that and some of the issues with that. But yeah, so that's kind of how it's going. And really, like if we kind of scroll down, right? So we can see that, like, I don't know, let's pretend there might be a layoff in year 3 here, right? In like July 2028. If I reach that point, I'll have a portfolio value of 850.6K, a net value of 406K as far as net equity, but then a huge margin balance of 443.8K, right? Since the margins just keeps getting stacked on and not being paid down. And then obviously the margin interest here keeps getting added as well too, and that's being tracked. But my monthly income here for the dividends will potentially theoretically be at 10.7K, which would actually well cover my net paycheck for the month, right? So yeah, you can kind of see here, I've updated these. So this happens a lot faster, obviously. But yeah, I guess what's scary here when you look at these numbers, right? So say like I reach 40, kind of like the goal that I'm shooting for as far as early retirement. It would potentially hit a $1.55 million gross portfolio and then 823.9K of net equity, but then a lot of margin, 725.3K. So quite a bit. The equity would be at 53.2%, 12%, so above 50. So this definitely dips all the way down to 45. So quite a bit lower. And yeah, what makes me nervous in this is that even just, now, right? You can kind of see how the market's going now, right? Yeah, you can see how that's dipped a lot. Just obviously I don't have as much income coming in, but also just because stuff is dipping a lot with the volatility. So we can kind of see how that can kind of happen kind of quick, right? So kind of gets me nervous to kind of get down to these lows, right? As I'm stacking the margin as well too. You can kind of see how that stuff plays out. And then if we go all the way to 45, it could potentially be at 478 million, which is crazy for gross value, and then potentially 3.17 million net equity value, but then 1.6 million of margin. So it's crazy. And this, I guess at this point, this would actually be the 4% margin rate instead of the 4.5%. But yeah, just a lot of margin. The equity would be sitting at 6.47%. So, it's a lot of risk, right? It's a very risky proposition to do that and stacking a lot of margin, even given that I already have a lot right now, as is at like 164K, I'd say. But you can kind of see how that kind of plays out in later parts where this can actually grow quite a bit and like a lot faster than where I'd be at with a more conservative scenario. So yeah, that's kind of where it's at. You can kind of see where these things move, right? As far as the extra net paycheck covered, monthly expenses, net monthly salary and all that. But yeah, so what makes me nervous with this, as I've mentioned, is yeah, the margin kind of constantly being stacked, the equity kind of getting relatively low. Seems like it bottoms out at looks like 45.44%, right around towards the end of this year, if I were to do this. But then yeah, the monthly dividends are growing quite a bit. This is the full reinvestment thing. Like, given these numbers, honestly, I'd feel a little bit uneasy fully doing this. It's just a lot on the margin, more than I feel like I'm comfortable with as far as my risk tolerance. And my risk tolerance is already pretty high given what I'm doing. But yeah, this might be maybe a step too far there. So that made me kind of run a more conservative scenario here, right? So if we pop over here, then we can kind of compare it at like the major milestones here at like say 40 or whatnot. So similar thing, just investing the paycheck 100% in high yield now, no more growth. High yield investments deposit to cash and margin here to kind of keep the margin balance under control. And then I'm still withdrawing from the brokerage for bills, right? So same thing, same blended yield that we're targeting, same annual growth rate here. And actually that one thing that I want to show here, like if I zero this out, this is still, because given that like all the money that you're putting in, right, it still puts you like at a pretty good amount. Like, yeah, assuming no growth at all in the portfolio, like the portfolio would still potentially grow to 4 million potentially, right? Which is crazy when you look at that, right? Because it's basically adding that. Yeah, this is times zero, so this adds nothing, adding your paycheck, and then also the average monthly dividends, right? You're just kind of putting so much more cash in that sense. But I'm gonna kind of go 4%, given that I still have some growth stuff in the background potentially. Just wanted to show that before and after. If we pop back to the conservative scenario here, yeah, so the cash margin would still withdraw from the brokerage. Same assumptions here as far as the monthly growth rate, paycheck contribution, this one, which I'll remove the 60% paycheck because it's 100%. So yeah, a lot of the same calculations here. And then the only difference here is that the average monthly dividends, like, yeah, I'm really only just adding this average monthly dividend add from Paycheck, right? Because I'm not adding the dividends. These get deposited and also reduce the margin, right? So this basically kind of takes the margin balance, adds basically the difference between the monthly expenses and the monthly dividends that get deposited, and then adds the margin maintenance every month, right? So that's what's the margin result. And as you kind of step down here, so you see that like, so this is just kind of steadily growing, right? At like $137 a month, essentially. So at a steady clip, right? But then the margin also is only kind of growing per basically the difference between the monthly expenses and the average monthly dividends, right? So like, yeah, right now, what is that? Like a little over 4K of difference. So that's what gets added to the margin every month. But what happens is that eventually you do hit a point where the monthly dividends exceed the monthly expenses, right? So kind of right around here, essentially. Near 2029 it's looking like, and that's where any extra that the monthly dividends make, then that goes to paying down the margin, right? So you can kind of see that like the margin tops out around this point as well too, and then that's when it kind of starts kind of going down. Actually it kind of tops out, yeah, more roughly like here in 2030, and then you kind of see that it starts getting paid down, right? And yeah, all the way where like there's almost no margin by 45. And then you kind of own almost 1.8 million free and clear. So yeah, you can kind of see the big difference there, right? As far as how this progresses. If we check here and kind of just pop over between the two, you can kind of see how things shift and change, right? So potentially by 40 years old, I might have 957.4K in gross value, 670.7K in net equity value, and in margin, 286.6K. So a lot more manageable when you can compare it to this, right? So obviously here, the gross value is a lot more, 1.5 million, higher net equity value at 823.9K, but quite a bit of margin, 727.3K, right? Whereas here I'd be at 286.6K with this much net equity. So it feels a little bit more comfortable to me when I look at that. Like it, as far as like risk adjusted return, given what I'm doing, that kind of feels a little bit better to me to kind of be keeping the margin balance more under control. And then my equity is kind of steadily growing, right? When you look at this, right? I kind of charted it out here. You can kind of see. So the portfolio value kind of keeps growing steadily. The net equity value kind of starts exponentially growing at a certain point as the margin gets paid down, right? You can kind of see that there where they kind of deviate. So yeah, the more after kind of running through these projections, I'm kind of leaning more towards this. Honestly, it just feels a lot more comfortable, something I can kind of stomach a bit more, right? If we pop over to 45 to kind of see how that looks. But yeah, huge difference there, obviously, in millions, right? So 1.87 million in gross potentially with the conservative scenario, 1.86 in net value, and then here margin is basically nothing at that point, given how much you have. Yeah, here 4.7, 3.1, 1.6 in margin, and 52K of monthly income. Here it'd be closer to 20K of monthly income. So yeah, a lot bigger risk and reward considering this, right? Yeah. I don't know if that might be useful for someone in terms of you have a higher stomach for that than me, but given what we're going through right now, even just with the war volatility, right? Just this part for me kind of gets scary a bit, right? Because this can kind of drop a lot more dramatically as we're kind of seeing now, right? And yeah, I think like in between that I can kind of think of as far as potentially doing stuff. And then also, yeah, one thing to look at here that we didn't look at is, yeah, the monthly income. So 40, I'd be at 11.5K. So not quite my full salary replaced as far as the gross salary, but definitely the net salary replaced at that point. So still pretty good overall, right? But at year 3, I'm definitely like at a deficit. Like say there's a layoff at year 3 here. Again, I'd be in a better position over here. And with the more aggressive scenario, I'd be, yeah, my full net monthly salary would be covered. But at year 3, not quite. But here, what I'm thinking is that like, as a potentially more aggressive measure, what I could be doing potentially is I will still have my growth side of stuff still growing, right? In the scenario. So like all these guys for kind of those 2-3 years. So potentially what could happen is that I actually sell the growth side and actually just fully commit to high yield income at that point. Because yeah, that would kind of bridge the gap there. So like if we took like all my growth stuff, so that's like 161, 850, just times, I don't know, let's say I'm putting it into XPay, for example, so 20%. And so that'd be 32.3K annually. If I did by 12, that's 2.69K that I could add to my income right there. And that might actually be even bigger by the time in 2-3 years from now. But yeah, and that could kind of make up the difference here, that like if I were to get laid off in this scenario, I'd be better covered there as far as my monthly income. Then also really what I'm thinking maybe is, this was kind of like the plan a little bit before too with the previous portfolio setup with the growth and high yield, but like maybe once I reach like 70% or maybe 75 or 80%, whatever I kind of feel more comfortable with, right? Maybe that's a point where I actually do start reinvesting the dividend to high yield, or maybe even potentially growth. Who knows? That's kind of like a bridge will cross once we get there, I feel like. But I think like what's good with that is that there'll be a lot more of a buffer, right? Like I'll have a stronger equity that I can kind of be quote unquote drawing down from. Come here, I'm basically drawing down on where my equity was kind of low right now at 46%. And then that's why it kind of gets uncomfortably low. So like even potentially in a case like this, maybe it draws down to like, I don't know, like 50%, which feels a little bit more comfortable. And then at that point, like I'm kind of really supercharging my gross balance and net equity balance here, right? So that's a potential there that I'm kind of considering. And then, I mean, at the end of the day too, like if we kind of compare both these scenarios, right? And there's a big reason why I went with this strategy over my old growth one. So if we go to my old growth projection here, so this was my old sheet that I was using. Shout out to Dividend Growth Investing, whose sheet I modified to kind of work with this. So this was my previous setup for when I was in growth investing for the most part, along with a little bit of dividend growth. And this was when I was contributing 30% of my salary, right? And kind of assuming a capital appreciation of 12%, some dividend growth, and just like a little yield back then, my smaller yield. And my idea here was this is when I was kind of aiming for a 45-year-old early retirement. And my plan was to basically sell out of all of this and then invest it into kind of the safer high yields, kind of like SPY, QQQI, things like that, like aiming for like a 10% dividend yield. And yeah, and kind of live on that essentially. So I was kind of aiming for 45 at like roughly 1.7 million. And then that would have gotten me 170K a year essentially. But yeah, if we really compare these numbers, right, you can kind of see like it's a pretty big difference there, right? So even on the more conservative one, this is investing 100% of my paycheck, right? I would sit at 957K on the gross balance and 670K on my net equity balance. So quite a bit more than my portfolio value here at 40. This was actually just going off the gross balance. I was using a little bit of margin here. So this was assuming some margin here, but I didn't have a column for this at the time. But yeah, if we compare that to like say the gross balance, right? Quite a bit more. And then even at 45, yeah, this would be at 1.8 million and this would be at 1.4 million, right? So quite a bit of difference there. And then obviously like, yeah, I'd have all that income along the way too, which this one didn't have because it was all growth. And yeah, and then I mean, even crazier once you kind of compare to like this, the turbocharged one here, right? Like 4.7 million to 1.4, yeah, 1.5 million to 624 at 40, right? So huge difference. Yeah, you can kind of see that like why I kind of shifted from this strategy, right? I mean, like the heavily investing your paycheck is tried and true. That's what I kind of started with and just kind of wanted to approach that a different way and hear myself in like cases like that's going on right now with my layoff, right? Like had I not had this monthly income, I feel like I'd be in a worse spot with the layoff that I'm kind of currently getting, right? Like the 4.5K a month that I'm bringing in right now makes a huge difference between that and the rough unemployment income that I'm paying myself, quote unquote, right now. But it's put me in a better position and kind of secures me in case it happens again. Because I don't know at this point, it might definitely happen again. You never know. At this point, the industry is so volatile. People might have seen like the layoffs at Epic and Fortnite this week. Like that was really unfortunate to see. And it's like, yeah. Being number 2 game in the world is apparently not even enough to kind of save yourself from layoffs, right? Which is crazy to say. But yeah, that's the projections. Just to recap, like probably what I'm gonna settle on is, yeah, I'll still be investing 100% of my paycheck, but this time I'm just gonna be doing high yield ETFs going forward, safer ones as I mentioned, so SPY, QQQI, T-SPY, TDAC, MLPI, XPay, things like that. And yeah, so that will kind of add this on average in monthly dividends every month. And then I'll be adding that and then kind of slowly growing my equity and paying down my margin and kind of keeping that under control between my monthly expenses and my monthly dividends. And then potentially like once we reach that 70% mark, potentially 75, 80, somewhere around here, right? Maybe at this point, this is where I kind of start reinvesting the dividends heavily and kind of help turbocharge things a little bit to kind of just get that higher, really. So we'll see. That's kind of where it's at, because when I take a look at these numbers, right, it just kind of gets a little bit too crazy. I'd be curious what people think with here. Like, would you be able to stomach kind of the margin kind of going up as high as it does in this scenario? Just like, it's just a lot to me, right? 727K, 1.6 million at 45. Granted, you do have a $4.7 million portfolio here, or 3.1 million after margin. but a crazy amount of income per month. But I don't know. Keeping this in my back pocket, it's nice to know this is where it can go. Yeah, maybe I kind of veer that route at a certain point, but maybe not quite there yet. Spoke a little bit too soon the other day, I think, when I kind of made that declaration that maybe I should be reinvesting all my dividends, right? And rightly so. Some people called it out in the comments, and I appreciate that. And yeah, of course, I was always going to run these scenarios and just check the math first before I kind of dive into a multi-million-dollar affair in that way, right? So yeah, that's the projections and the kind of the new way I'll be doing stuff come my new paycheck in a couple weeks, which I'm excited for, honestly, and investing weekly and everything. So look forward to that. And that's the video. As usual, if you want to follow me off YouTube, there's a bunch of different ways to do that. There's Blossom Social. You can follow all my trades, see all my posts and everything. And also Snowball, which is also free. Everything that I'm linking here is completely free. And are in the link in the description below. You can see all the same numbers I show in Snowball typically, right? What's in the green, what's in the red. A lot in the red right now with the war of volatility. There's Patreon, of course. All my backlog of videos are in here. And a new thing that I added this week as well, I did add memberships to the YouTube channel. So currently 0 members. But yeah, definitely check it out if you're interested. Yeah, it's pretty basic right now as far as membership goes. I'm basically offering just like a supporter tier similar to like the Patreon. So exactly the same perks as far as you have access to like some private Discord chat rooms within the public Discord. You get a little Discord badge and really just the satisfaction of helping keeping the channel running, essentially. Consider it kind of like a monthly tip jar. You get priority reply to comments on YouTube. You have like some little emojis you can use on the channel as well too. And yeah, that's a little membership. May add more in the future, but like what I want to be mindful of, as I've kind of said in the past, is that I don't want to paywall any content in that way. And that's like a hard rule I'm kind of giving for myself because yeah, I want to stay free. I want to stay approachable to people. And really this is just like a little extra if you want to support the channel in that way. So yeah, this matches exactly what's in Patreon. That doesn't remove Patreon. This basically just gives more options if people just want to run everything on YouTube on their end. So yeah, if you're interested in joining, check it out. The join button should be on any video below. And then also, as usual, the last Discord, right? I love posting here in between videos, post all my trade alerts, have a bunch of cashback stuff that I was doing this week, as well as also, yeah, I forgot to mention that. The only thing I'll be reinvesting is my growth dividends. That I'll still be reinvesting into growth stuff since I won't be doing any more growth buys with the paycheck. So we'll be doing it through that. And yeah, that's the Discord. So love chatting with people in here, and we're nice and growing. I think almost about to reach 350 members. So give it a try if you want to join a free community with a lot of like-minded investors and learn from everyone else. We're all kind of learning from each other, bouncing ideas off each other. And yeah, that's how it should be, honestly. Yeah, there's no one end all be all way of doing things, right? There's a lot of different things you can kind of pick up based on your current goals and situations. Everyone's is different. So that's the video. I'll catch you in the next one. And if you appreciate this transparency, definitely give a like and subscribe and hit the bell notification if you want to be notified about future videos. And I'll catch you in the next one. Peace. The next one will be tomorrow, actually, and just going over the usual portfolio update for the week. So yeah, just wanted to make a special video just for these scenario projections. But yeah, catch you in the next one.